Otsukimi here. Who else would it be? This is Observations with Otsu with delayed observations on Tuesday, May 21st. Part of this was I was attending to my mom who had some surgery. Everything went well. Thank you for those wishes. Today, this is episode 67 of OWO. We're going to talk about Ethereum mainly on, hey, did Ethereum give us a second wind? I'm almost kind of glad that I postponed this for a day because I wouldn't be able to talk about this. I had an idea that a pump would be coming, but not necessarily to this effect. So we are going to talk about that. In addition, we're going to talk about, are we going to go to new highs pretty soon? That was a theme from last week's video. We're going to just continue rolling with that because now a lot of people kind of believe that more than last week. It was very strange. Like I thought I had a pretty good build up from last week, and the people that watched and responded, I think responded well. I got good feedback, but silence relative to the current market conditions. And I think that also proves to today, because a lot of people seem like they're sidelined today and yesterday, that they weren't quite ready for this move. Strongly disagree with that, but then we'll talk about that. This is just the introduction. We're going to get started. You saw the video introduction, which I'm going to start doing to save time, and also show you links, things like that. Go ahead and check those out. I'm not sponsored. I don't plan to ever be sponsored. That's how I am able to continue to push. So if you like what I'm doing, if you like my scripts, you like my videos, services, those are paid options. Some of them are not paid options, but some of them are. Go ahead and look at those, see what kind of floats your boat. I got small plans for trading groups as low as $20 a month, and I've got some scripts that you could work on individually that are a little bit higher than that. Whatever it is that suits your needs. Pretty sure that I can fulfill that need for probably 90% of people. I think I'm a little more confident that I'm spreading that out for different types of traders. So go ahead and check those out. If you have questions, go ahead and DM me or send me a comment in the comment section, I should say. So anyway, that's the introduction. Let's get started. So the theme for this video is Ethereum, creating a new hope. And so it kind of plays on a little bit of a Star Wars theme, but I've already done that. So I kind of wanted to get away from that. A little generic. And so the new format for my videos too is to make the intro smaller, make the theme smaller, to kind of get these videos about 30 minutes per episode instead of an hour. I've long tried to do that. But anyway, this section is the theme section of this video where we're going to discuss that. We're going to take a look at Ethereum. As you guys know, the ETF news have kind of taken a big 180. I guess I should actually go to Ethereum versus Bitcoin. This is what this looks like here. And a lot of chicken scratch. So I'm going to go to a different chart because I want to preserve all of that and delete this data here. This was your big candle. This was your big ETF-esque candle. It's not approved. People are just kind of perceiving that as approved. I have some disagreements on how much news impacted this, but that being said, I do know that the news did impact yesterday's activity, so I'm not going to discredit that by any means. I think this is a very hybrid scenario. I've discussed this plenty of times where I lean against the news impacting price. However, I think that's not always the case. That's not going to be 100% true. And so in this particular case is one of those candles where, yes, the news probably did have an impact. That being said, the market gave way to that as well, which we'll take a look at. You saw my wedge candle right here, and that was by design. We had a reclaim of this zone, reclaim above the 100 right at the wedge. When you have a big wedge pattern like this, it tends to go about halfway up. And so about halfway was roughly about 14, 15%, and I believe this went up 19%. So you had an extra room there, about 19, 20%. And so actually it's about 15% from the break. I forgot about that. So about 16, 17%. So pretty close. And again, my goal here is not to say, well, the ETF news didn't impact the price. Like, I understand that has a large influence on trading activity, right? I know people that longed when that news, which wasn't even news, really came out. So I understand that. Okay, I know it's much more nuanced than how I'm trying to blanket statement that, right? My overall goal is you can't always think that for every single news bit, because you're going to start longing and shorting because of that, and you're going to stop yourself out. My thing is, if you see, we have crypto news every day almost nowadays. And so if you have 300 bits of news for 300 trading days, and you are influenced by all three of the 300 of those, news based announcements, the spread is going to be against you, in my opinion. My very, very strong, strict opinion is that you will probably lose money in the long run trying to navigate based off of news. Okay. Whereas if you take trading and TA, your odds are much more likely. And even with something like this, you go ahead and check my videos. I've talked about this, I'm pretty sure, for at least 30 days. And I think honestly, really around here, about middle of April, or even if it was late April, it was still a month. So I've been talking about this wedge for about a month now, and anticipating a long on Ethereum. And so we just took profits on this position yesterday, because we had a trade going up to this zone. We broke that zone, and so that all worked out. So yes, the ETF news probably propelled that a little bit higher, but that was still within the bounds of my trading TA. And again, this is not to brag. This really isn't. My object orientation here is to tell you TA will win over news 99% of the time. And even when something like this, even if I am willing to say, all right, the news did impact this, which I can say, sure, I'll go ahead and say that. But the TA was still a prominent factor here, as TA gave you the setup. See what I'm saying? So instead of trying to wait for the news and then long reactively, you could have been prepared to look at this, because we had a double drop here, and then it broke down, and this was your fake out opportunity. This candle right here going not just above this structure on the support zone, but above this 100. This was your zone opportunity. So you could have longed this candle right here, put your stop loss below the support structure, and then current price action would give you 3.66 at 22%, and then adjust your risk accordingly. So that gave us that opportunity, is what I'm saying. So again, now that being said, is the ETF news going to be approved? I think so. I never thought that was a doubt. For me, I honestly think it was just dramatics anyway, and that's another reason I don't really care to watch news, because I mean, we live in 2024. Okay, the news is already well equipped to try to mess with you, mess with the average person, create drama, create different types of wavelengths of issues and discussion, things like that. Okay. So and not only that, like, I know that this is a process. ETF things are a process. And so it's just kind of how it is. So I'm open. I've always been open to ETFs. I've never been against that, but it's just don't quite, I don't quite follow all of that, just because I know that this is going to be like a big process. And this doesn't change the fact that I'm just trading this. Okay. It doesn't change the fact that I'm still making money off this. I'm still navigating what the charts are telling me. And the charts were telling me this long before this ETF news, which wasn't even technically news. It didn't get approved. This could come back down, and then it could, maybe the candle will react negatively. See what I'm saying? Like, what does this show you? It doesn't really show you anything. And so I'm not dismissing it. I'm just saying, technical analysis will win out, battle to battle. So anyway, that's just the ETF thing. So then going on to the next part of the theme, like new highs. Like, are we going to get to new highs? And we can talk about that more per candle, but I believe so. With Ethereum here, we're already pushing closer to 4,000. This is that zone right here. I can, actually, I'll probably just go to a different chart so we can chart ETF effectively or Ethereum later on in this video. But one thing I see here overall is this structure right here. I think we're going to land into some resistance here. We do have this big candle also created a breaker, so there is a chance that we could hit back to this zone sometime even as early as next week. I think, and that would be like 33.50. And this is a big deal, honestly, because we're already hyped and pumped for the news. So this not only just created um, a good pump and made people some money, but it's also created a new like sub paradigm. Like people are expecting this to go up only. So people have changed completely from hopium to like real hope, right? People thought the reason people are sidelined is because people thought the market was dying. Okay, and this happens every time when people start arguing online, like people like the duck and everybody else, they start arguing, they start trying to create very strong egotistical bases for trading that are not based on TA, just based on their personal feelings. When they also tell you not to be emotional about trading, they themselves are emotional about trading, then they mess up. Okay, and people can mess up. That's not a problem, right? My problem is like what what is going to prevent them from doing that again? Okay, and then that's why I do criticize um you know people like that, where I don't criticize in a personal way, but you should follow your own instincts. And I mentioned a tweet today: be responsible for your own trades, and I absolutely mean that. Because you are going to succeed and excel the most under your own umbrella of what you determine trading is. Okay, not somebody else, especially some anonymous duck that probably doesn't have your best interests, has shown that they don't have their best interest for people, constantly make fun of people for just holding coins. Whether or not those coins are good or not, that's not the point. The point is there's people like that out there that don't respect people as human beings, okay? And that's something where I can have my beef with people, but I still respect people as human beings. And that's where I draw the line. So anyway, with that, you have your resistance zone here, your breaker. But the point is, with this breaker, a lot of people are going to think, okay, we have this new, sub paradigm where the hope has been instilled. Well, what happens if we come back down to this breaker, and that's a 10% drop? Everybody's going to be, who's gonna buy that? I don't think a lot of people are going to buy that because they're going to be thinking that this whole up only was a complete false thing. You're gonna. I think this is a bear trap, in my opinion. I think that we will retest up here, come back down, buy somewhere up above this zone, and actually, here's your big layout right here. So if we make this break back below 36.6, which we probably should, I think that that's going to cause a lot of bears to get excited again, and then that's going to trap them. I do think that we are going up. I don't think that we're going up only, but I think that we're going up most of the time. So that's what I see. But I said this, and that's why I brought up the duck scenarios, because I think people are going to get baited into thinking this is a fake rally and this is a real rally, in my opinion. But I think that we are going to have a fake dip first. So that's how I view it. But do I think that we're going to all-time highs pretty soon? I think that's a little bit, the jury's a little bit out for that because we got to go up a little bit higher. But I think that there's a good case for that. I think, this isn't necessarily the most bullish structure. I would be much more happier if we just broke that 4,100. I know that's a little bit discouraging because that's almost to 5,000. So that's an easy bet to take. But I think that, that's something that's completely plausible for me. I don't see any issues why we would be concerned about that. And so we do also have some structure here. Like this is a very similar structure to here as well. And so that also could be a rally. We could get something like this where we pump, double top, and then come way back down. And so it's possible we could get that 4,000 and then come back all the way down to that 3,000. That's completely possible. And I think a lot of people just can't stomach that, and that's okay. 3-day does give us a bullish cross on the high side, so that's pretty good. Aaron also gives us a bullish trend above that zone, so things are looking pretty trendy here. So I think that we could go to all-time high. And speaking of which, with Bitcoin, I think that that's almost self-explanatory. We got a triple top here. It's we're getting that pressure, right? And so we'll talk about that more in the Bitcoin section. But as far as new all-time highs, I think that this is I think that we can get there pretty well. For Solana, I already have 250 as a target for in the free section of our Discord. You know, I think that's a complete plausibility. I think that the rejection was supposed to happen. That's one thing that we did discuss as well yesterday. So as far as new all-time highs, I think that we will get there. I think also, however, we need to not jump to conclusions so quickly. And this is one reason why we're getting this drop down today as well. Like I was not um and I say this all the time. Sorry, I'm jumping around. I say this all the time that when we get a big pump like this from yesterday, that a small red retrace will be expected, and that people just don't want to stomach red days. And it's very frustrating because that's healthy. That's how you buy dips. That's how you are able to calculate stronger demand zones. This is part of what trading is. If you can't stomach it, I mean, I hate to say, but I got news for you. That it's going to be a very difficult journey. But I look at red as opportunities. I don't look at red as losing money. So anyway, that's the new high. The whole new high discussion. I think we will get there, but I think it might not get there as quickly as you think. I actually think we will get there as quickly as some people might think. We'll get there pretty quickly, but I think not immediate. So anyway, that's the whole new high discussion. So now I also want to look at things in terms of the Apex system that I use. I put up my Apex indicator, but this is also a trading method that I use. The script is part of a method that I use called Apex, which stands for Arin Price Action Exponential. I use a lot of those three in tandem with some other minor things to incorporate a trading system that has worked for me. This is also the prominent idea behind my academy called Apex Academy as well. And again, this is a little bit of a plug, but I also am showing this to you in response to how I was prepared for this move more than other people were. And so I'm going to look at Bitcoin here. And so I had a buy opportunity. I mean, yes, I had some sell opportunities as well here. But with the recent move, I had a buy opportunity here right at about 62,190. And so that's where I would have placed that right there. And these lines give you, the darker line gives me the entry. The red marker on the bottom gives me the stop loss. And so that's a pretty tight stop. If I extended that out, I can, hold on a second. I'll extend this out to like 1% for like a higher leverage trade opportunity. And so that would be kind of the minimum on the like an effective trade. And so even current price actions would give you that 12.9, right? And so that's kind of how that works. If you are not, satisfied with that, I also had one on the daily as well, which gave us a buy opportunity here at 66,000, and now we're currently still at 70,000. So that's kind of one of those things that I look at. Ethereum gave us a really good example as well. And so, the market went up pretty good in the past couple days, and so it probably gave us a lot more signals than normal, also. And so with current price actions with this would have gave us 11R. So with these two combined, you're pushing upwards of 20, probably 23, and so that's pretty good. I don't think a lot of people are bragging about, and I'm not bragging either, but a lot of people are not showing you their results right now because they did not get in the market. Okay, they did not tell you, that they, a lot of people got this wrong. Okay, so I think that this is one thing that I really wanted to mention because it's not about being right or wrong either. I want to really emphasize that. I'm not trying to just say, hey, I'm right, here's all my proof, sucks to be you kind of thing. That's not what I'm saying. What I am saying is the Apex system that I've created, I mean, 8 years in the making, is how I was able to navigate the trends and how the market kind of shifted. I do not think that it was just because ETF. Okay, I don't believe it. I don't, and that's based off tangible experience. I have this discussion once every 3 months about how there's something happened with the news. Why did this go down? Well, it was because of this news. No, it's wrong. It's wrong. It's wrong. Okay, that part I'm willing to be wrong, but I have very strong justifiable evidence that news as a constant is not accurate to determine market structure. Okay. Um, that being said, with this Apex system, and a lot of this is ARIN based. Okay, and a lot of that is, it's not proprietary by any means. It just seems proprietary because I'm the only one that uses ARIN, and I teach that system to you in the academy. But another option here with the long, I mean, yeah, we got chopped here a little bit, but current price action set us about 3-4R, so that's pretty decent. We got kind of a drop down for Solana, so not as much as other ones, but even something, let's go to, I think we had this on the daily here. Let's go to Bonk, and so Bonk, we had a long signal here at about 24.8, on the 4 hour, pretty strong reaction relative to that, and this is all something that I'm just showing you. Auction. This was a trade that we looked at in the paid in the premium section. So that one's doing well. And there's and that wasn't the trades that I just showed you, by the way. And so where are we at here? I'm losing my train of thought. Let's go to Pepe. Pepe's up about 7-8%. This one you had a buy signal down here, all the way from the 690 section. And so from this, would not have gotten stopped out, rallied to current price action. Now we're at 4.4, and so looking pretty good. That's reason why I have that, because it allows me to view the trends and momentum and ARIN and all in tandem to see where we are at. And so that's just one script. I got other ones, but and again, I wasn't trying to plug, even though I kind of was too. The point was I was able to recognize this momentum with Ethereum and things like that prior to that. Okay, yeah, it was the wedges too. That's part of the system. But that's just something I wanted to share. Now, let's go into the nitty gritty. Let's get into Bitcoin on the weekly. All right, we're on Bitcoin doing the weekly down, just mainly just weekly, daily for each of these. So last week we had a pretty good weekly structure. Probably the first big bullish candle for a little while. Probably bigger than this one, but not as big as that one, of course. So the biggest one, maybe about 2 months or so. The big thing for me was that as far as the ARIN trend goes, we broke above the trend. So we are starting a new trend zone with this. Now, keep in mind, this is the weekly. This is why I emphasize that you need to be okay with some red days, okay? Because if you're not okay with a few red days, they're going to stop you out of these bigger moves, okay? You have to get used to this. So from the last one that we had here all the way to this one, you had 1, 2, 3, 4 bearish candles in a mix of maybe 20 total candles. 14 or 15 of them were bullish, the rest of them were bearish. You need to be okay with that. You need to be okay with some bearish days and some bearish weeks in order to take the gravity of the trend seriously in your favor. And so that's why I emphasize that. You should not be okay with up only. You should not be okay with down only. You should understand that things go up and down all the time, but they go up and down in tandem to a certain trend. Okay, that's how you navigate that. Just knowing that alone will keep you from being stopped out. Okay, and that's why I emphasize trends. Okay, very rarely do things go outside the bounds of a trend. Okay, we can have a bearish trend like this. Okay, like this is a sub bearish trend, right? So this is a trend. This is a bullish trend, right? Actually, we'll just go right here. This is a bearish trend. This is, or a bullish trend, I'm sorry. This is a bearish sub trend, okay? But this is still trendy because it is above the zone. I didn't know I could erase that. That's interesting. So according to my band rules, as long as this is above the band, it is still bullish, right? So we can have a consolidation here. This is a bullish consolidation. Drop down, this was your buy opportunity. Here you had, 1, 2, 3, 4, 5, 6, almost 7 candles of bearish price action, even if you want to include this. Excuse me. So, but we still broke bullish. This is still a bullish trend forming. Okay. And so we closed above that zone. We closed here, which made that neutral. Now we broke above bullish. So now we are good. This also tells me that if you wanted to buy in again for the long-term trend, this is an okay place to do it. Okay. This is telling me, and this could be wrong. It can always change. Okay. But this is still part of a trend where the trend has shifted back to the bulls. Okay. The bears just kind of gave it up. And so now we're okay to continue forward as long as that status quo remains the same. And so that's how that works. And so as far as price action goes, I've talked about this about the swing high order block here. We've broke above here on the current candle, but this is not a current candle. This is the previous candle that we had. So we broke back into the support structure. If we break above this and close it, now we have a new price action sub paradigm. And so that's what I'm saying. Like the trend just told you that things are bullish again. Price action still is a little bit neutral on that side, but still is looking bullish as long as we close above the 69,130. Okay, and there's a pretty good chance that we could do that. So, so that being said, like, don't think that you've just missed your opportunity either, because you probably do have some opportunities here with that. So, just keep that in mind. And that's as far as price action. Aaron, we're still in a bearish wedge, and so again, we're not even technically bear, or we're not even. I mean, we are bullish on the Aaron, but we're looking for this bearish cross here. If we do, then we might get a bullish consolidation. Looking to that as well. RSI is looking pretty healthy at 71%. Nothing really significant with that. So there's no reason to be bullish or bearish here by any means. I apologize. I keep I keep mixing bullish and bearish, and it's probably not the best thing for a big video like this. But the point is, there's no reason to be overly bearish right now, really at all. Everything has really just been a buy opportunity, a buy the dip opportunity. The market structure for the weekly has still been bullish, and there's no reason to think otherwise. We had a small one. We had a 1 week div, which was important, and that has played out. Okay, and that's what I say. Like a lot of you did not think about this. That was a sign to take profits and get out. And so this is a rally to say that, hey, it's time to get back in. Got back in at a lower level. It happens, but that's also, hey, you're still making money with that, and that's not a bad thing by any means. Um, it's a key observation. Like bullish divergences at highs need to be respected, need to be taken seriously, and it was for me. It came back down below the range, and now we broke back above, and everything is good again. So it's looking pretty solid. Let's go to the daily. Strange structure here. We've talked about this before. I'll switch to this section here. This is a position that we have not quite taken profits yet, but this is in the Discord channel. We have this support structure here at the 60, had this deviation below the 100. I emphasize this pretty much to death. As far as how serious this was, it made a key indication that we would rally. I was prepared for that. I prepared my followers for that, and it worked out for us. You always have like an Adam and Eve structure on a lower time frame. It's more observation. It's you can see it better on lower time frames, but it's there on, you can kind of see on the daily. Excuse me. So and then we kind of had this consolidation at the mid structure, and now we're pushing forward. And so now we're looking for that 73 marker. We just broke below 70,000, and that's completely okay. I mentioned that we could come back to the 67,000, and that's my emphasis, right? I think that we can come back as low as 67. I think we can go back as low as 64, honestly, and still be okay. And that's what a lot of people are not understanding here. We are going to have a red day. We're probably going to have a red couple days, and this is going to be a trap. Okay, this is going to be a bear trap, more than likely a bear trap. The way that you can tell is if it retests back at this zone. If it comes back below and deviates, then it's a real bearish move. And that's why I take deviation so seriously. They tell you the difference between a trap and a real move, okay? This was a trap here. This deviated and broke back above here. This was a trap for bears. Okay, you don't. I would not short here necessarily, but a lot of people did, and whether you did or you didn't, it doesn't matter because once it broke above here, it's more important. I think deviations are this deviation was stronger for bulls than it was for a test of support, because that shows you that the support was more serious, and it people got trapped on the other side of it. So that's how I view that. So everything's looking good here. Aaron is still full bull here. No consolidation. RSI is at 61. Everything is pretty healthy here. The way that you can also view this too, and I'll go back to this one and kind of clear this out, is really that we're just in this big range right here. Okay, I don't treat deviations as part of the range. This is your range, and we're just stuck within a big range here again. And so that's looking pretty solid. it's very possible that we can come back down to 67. We could do that today, and that would still be bullish. Okay, so just keep that in mind that not everything has to go exactly how you anticipated. The problem also too is we have a big green day like yesterday. Everybody says, "Oh, we're back in business. The tech looks good again." Blah 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 blah. And then everybody longs everything, and then everybody gets sidelined. Okay, that's one reason why I didn't necessarily super long anything today, because I know auction was one that we did look at, but everything else is a mixed bag, and that is okay. That doesn't mean that longs are wrong either. It just means that we're coming back for a healthy pullback. So that's Bitcoin. Let's go to Ethereum. I'm actually going to have to cut this video a little bit short, so I'm going to stop at Ethereum because I'm running late on time, and so I'll try to do a part two in some other time. So anyway, let's get started here. Let's go to the weekly. Uh, you know, this candle alone, this is the current candle, and I'm going to go to a different chart here, just for clarity's sake. And so the candle from last week wasn't really that impressive. Okay, that's one of these things where it didn't really give us a big opportunity of what to expect on the weekly. The daily was much different. We had a big explosive weekly candle, and yes, this was partly fueled by news-based stuff. But also for the Aaron band, like we are still breaking out of the band. So this is also a tell that, hey, even if we close here, we still have a lot of opportunity to go to with this. So just keep that in mind. It's not necessarily you're not on the sidelines permanently because you missed this move. Okay. And also one thing I know is when you do get these kind of moves, they do tend to fade. And that's why I talked about that breaker, which we'll talk about again here in a second. As far as Aaron goes, we're in a bearish wedge, getting ready to cross to the low side, which is going to be a low impacted move, which means that we should get a continued bullish rally over the next 30 days, roughly. So RSI bounced pretty close to the 50 and is looking pretty solid with that one. And so we can take a look at a few things here from this section right here. You had the structure, probably do this more so on the candle bodies. Got a break below, had a push up above, so we could interpret this as a good rally that reclaimed above the zone. I don't typically view mid structures that way, but you could. I'm not against that. It would probably be more so because of this structure here instead, and so it kind of rallied above this zone, and so that's fine. But I think both of those are relatively weak, but they are plausible in that regard. As far as resistances, we're at this current zone right here, basically at resistance. I think that's one reason why we're getting above this zone here. And then even if we can break above that, we still have this entire swing high order block to deal with. So I don't necessarily think that we're going to go too much higher this week, to be honest with you, because this is a pretty strong move. And a lot of times they don't rally that hard that fast. And then even if they do, this will become a bullish breaker, and we'll have to retest that again. So that's why I take breakers very seriously, because there is such a thing as going too up too fast, right? And because of that, psychologically speaking, there is a supply and demand concern about that. The demand was impactful, but it wasn't strong. Okay, and one of the reasons is if you have people buying and you have nobody selling, then there's an offset of demand, right? And so that's kind of how that works. And what I mean by this is, if let's take Ethereum, if Ethereum goes to 2,000 to 3,000, where it's all buy opportunities, nobody's selling, everybody's buying, that is weaker than saying Ethereum went from 2,000 to 3,000 and then there was a struggle the whole time. And the reason being is that struggle helps you figure out that's kind of like people negotiating. Like if someone wants to buy a car, like, oh, I'm selling this for 40,000. Well, I'll give you 30,000. I'll give you 35. I'll sell it 34, or whatever. So you negotiate that, and when you negotiate those structures, that tells you that is the confirmed price point. Whereas if somebody tries to sell a car, it's like, oh, it's 40,000 firm, I'll give you 39. No, I'm only taking 40. Then you settle at that 40, but the person that bought it at 40 isn't as happy. I mean, they're happy because they got the car, but they're not happy because they wanted a better price and they didn't get it. And so that's kind of how that works. So the more think of buying and selling as negotiating. Like these are negotiations as far as how integral these prices are. And so when you have a big structure, a big candle like this, where it's all buyers, little sellers, that shows you that this is more. There's a lot of paper hands basically in that, and so a lot of them will fold. Literally, no pun intended, will fold because there's not a lot of negotiation with that price point. And so that's why I take breakers so seriously, because breakers show that there is a lack of negotiation. So anyway, this is the resistance. I think that we will struggle with this. I don't think that this is going to be an easy ask. And so don't be surprised if we close. Here's the thing: I don't be surprised if we close lower than this on the weekly, but still has a pretty serious bullish candle. So we could come back down as low as 3,300 and still be very bullish on this. And so don't let people confuse you. You've heard it here first. If we come back down to 34, 3,500 and be like, oh, this big weekly rejection wick, that's bad, we're going back down. Nope, not true, because the weekly still broke out above this structure. Okay, so that's the weekly. Let's go to the daily. Pretty big candle here. I'm going to re-emphasize this is the wedge formation here that we were looking at. Broke below the zone, had a tap here. This was your order block structure, tap below this zone, or on the zone, a little bit in the mid, and then we actually lost this zone. And so I was like, and I mentioned that, and this is why we had this next structure here at 27, and now we're at 37, but now we broke back above that structure completely. This was your sign to get back in or take this more seriously. Had the build up, small consolidation impulse. Okay, this is something that we talked about for over a month in our Discord group. So, and on top of that, it complemented with a 63% high cross. So that is a high bullish cross. So that means this trend should continue. It should continue to rally. RSI is at 72. So there's no oversold. There's no retest. We did retest at the 50, and so that's another emphasis there. And that was right at the zone. We touched the 100 with the 50, and that there is. It's like I can understand people want to cancel their trades on that, but that's also why you don't. If a trade looks bad but hasn't gone bad, it's not bad. And I don't think people really understand that too much. I think people don't wait for confirmation because they're willing to they don't want to lose money. Because they're not willing to risk losing money, then they don't make money either, and then they still lose money anyway. So because of fees and what have you. So anyway, that's Ethereum. So complete apologies. I have to close this video out early. I meant to do Solana and Dogecoin and Bonk, but I'm going to have to take this early for time constraints. So that being said, I'll try to do an update maybe in Discord or on X and update the rest of this video. And so go ahead and look out for that. If I do that, I'll probably put a link in the description as well. So anyway, I hope you have a great day. I know this is kind of not the best video as far as the timing being on Tuesdays and closing it out early, but I want to emphasize that these retests will happen, these moves will happen, and you need to really prepare yourself in advance for these because you're not going to have time to navigate through this once the trend gets super high or what have you. Don't get influenced, especially by bigger influencer, really anybody, but bigger influencers that don't have your best interest, that hide behind their screens or what have you. So, but anyway, that being said, let me know what you think. I'm happy to discuss things more. I'll see you next time.